Welcome to Charting Wealth's quarterly chart review for the first quarter of 2018. You've made it through the first quarter. It is now the end of March. The next quarter will, of course, end at the end of June. What do we see going on in our quarterly chart? We're going to jump right into that. For those of you who are new to this quarterly chart, it is something that we ran across. We did not find it on the NASDAQ 100, we did not find it on gold, we did not find it on bonds, but this quarterly chart works amazingly well for the S&P 500 as depicted by SPY, which is of course the SPDR's S&P 500 Trust Series Exchange Traded Fund. And of course it represents the 500 big stocks in the S&P 500. Now, we would go back further than 96, but our red line, that is our exponential moving average that we use as our trigger line, ends because that's as far back as our software allows us to go. This is the software that we use at TC2000 and Free Stock Charts, but it's plenty good. It goes back more than 20 years. And what we see is that the charting software on this quarterly chart would have gotten us out of the market at the best times, some of the best times to actually get out. It would have gotten us out with the crossing over going down on the Price Percent Oscillator, would have gotten us out actually back mid-year 2000 before the market rolled over and hammered down all the way through 2003 rather, and then would have gotten us back into the market somewhere in the time frame of early 2005 on that run up, would have gotten us back out of the market in mid 2008 for the market slam down, and would have gotten us back safely into the market sometime around the beginning or so of the year 2011 for the latest run-up. That's how accurate this quarterly chart has been. So those of you who are looking to chart long-term wealth, I commend this chart to you. I'm not giving you charting advice. We're an education firm, but I'd ask you to study it and practice trading it because it is pretty amazing. Now we talk about the Trump effect, and this is a really interesting thing. As accurate as this chart has been for over 20 years, we've never seen the thing that happened in 2016 occur. You guys remember how flimsy the economy got sort of starting in mid-2015 and going on to the beginning of 2016? The market really started having some shudders enough that as we really zoom in, we actually had a crossover going down on the Price Percent Oscillator. The Derivative Oscillator flipped over to the negative in June and September of 2016. And so we really had a signal to get out of the market. But something amazing occurred. The market crossed back over after Trump got well, it actually started about the time that Trump declared running for president. Now again, I'm not a conspiracy theorist. I don't know who knew what when or just what happened, but it is really amazing what did occur, how the markets turned around about mid-year going into September through December, and then we had the crossover, the quarterly vertical crossover going up, which is what our purple line dictates. That's the entry point for you at the end of that. And what have we seen happen? We've literally had, since June, the market started moving up. Our crossover occurred in March. That was June 2016. Our crossover occurred in March a year ago. And of course, we've now had a solid year, actually more than that, of total run-up on this thing. It has just been amazing. We've seen the market just take off and continue to go. Now, as of late, as we record this for you at the end of March, of course, we saw some blowouts occur with that big drop that occurred in February, where the markets really took a hit. In fact, we'll take a look at that on our February chart. We saw that occur on February 9, and then the market really slid sideways on the weekly chart, sort of tried to track up, and then topped off on the week of the 16th. That's the week ending March the 16th. And then for the last couple of weeks dropped down. Now those shutters do have an impact on our quarterly chart as we go back to it. What we have actually seen happen, and this is a bit of a warning sign, not that the market's going to immediately go down or anything, but we've seen the level of increase in the derivative oscillator as it has stair-stepped up quite nicely. We've seen that even out, we've seen that flatten very much. It's not going up nearly at the pace it had been going up. And even more importantly, we've seen the price percent oscillator. That is our main indicator. It has gone pretty much flat. It's not going down yet, but it is flat, and that's a cautionary note. Those of you who are looking to track, to practice trade is always the caveat we give. The long-term charts, we do note caution for you at this time. Our weekly chart, of course, has crossed over going down. Quarterly chart has not yet, so there's no pull out at this point, but there is a pause for concern to just pay attention as to how the markets continue to go through the second, third, and fourth quarter of this year. And if we really do start seeing some kind of back off, if we start seeing red spinning tops as we did back in September of 2015, or even more if you start seeing solid red down candles with wicks on the bottom. Hasn't happened yet, still have a nice green up candle, but the flattening of the price percent oscillator gives us some concerns. Now again, this is something we look at once a quarter, but it is an amazing chart. I think anyone would agree when you look at this and see how accurate this chart is, that it would have literally gotten you into the market and out of the market at prime times over the last 20 years. And the strangeness of what we call the Trump effect back there in 2016, when clearly the market was moving over down, and all of a sudden it recovered and started shooting up over the last year. It's very, very uncharacteristic of everything we see going back 20 years. That's where we are, folks, as we end the first quarter of 2018. I want to encourage you to please, every single day, spend 10 minutes with us at Charting Wealth. Go ahead, go sign up at chartingwealth.com. Get our daily market reviews. In those emails, you will receive every single day the links to the layout that we use at freestockcharts.com that you see before you, where the quarterly chart is available. Also a discount if you want to subscribe to the paid service, TC2000. You'll also see the daily market worksheets, the weekly market worksheets, and the trade worksheets. All PDF files you can print out for yourself for free. Everything we do for you, we bring to you at no charge. And I'm happy to report I've just finished the book. I'm just hiring the editor, and we're going to be getting Charting Wealth, the book, out to you soon, so stand by for that. We always love your emails. Write us cw@chartingwealth.com, and you are the reason that we are here. We love your letters. We so appreciate those of you who thank us for what we do and those of you who are using us. And again, if you want to figure out how these charts work, you need to spend 10 minutes a day with us every day. Print out those daily market worksheets once a week, the weekly market worksheet, and every time you do a practice trade, the practice worksheet. We're here for you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.